Morning, everyone. It's 8:40 on Friday the 23rd, and it's an ugly morning. It's an ugly morning for a lot of reasons, but primarily, uh, initially, Asia and Europe followed us lower, and the futures, when I came down about 7:30, were down about 350 in the Dow, 160 in the Nasdaq, and 48 in the S&P. Right now, the Dow is down 390. Um, excuse me. The S&P is down 53, and the Nasdaq, of course, is following along, down about 175. So what's going on? Well, the British pound is getting pounded, and they're going to try and take some of the sting out of the incredibly, absurdly high energy prices coming into the winter. I just had the dog out, and I can tell you for sure here, fall is definitely here. So, winter is right around the corner, and I think it's going to get tough here too. Not as bad as it is in Germany or Great Britain, but ugly. Um, So, what's the problem? Well, the problem is, as I've stated before repeatedly, the theory of dollar value, number one, is tied directly to higher yields. If you want, if you want to have higher interest rates, you need a strong currency. And unfortunately, ours is dramatically strong. Not because it's strong in and of itself, but because it's strong against the basket of currencies, of which the euro is 65%, because they're getting pounded. So, we had intervention yesterday or the day before on the Japanese yen, so it continues lower. And when you have the British pound, this was traditionally a $2.40 versus the dollar. It's now $1.10 or $1.11. So you can see the issue there. And while I'm still listening to the teleprompter readers talking about a recession coming next year, get it right. We're there. We're in a recession. And recession is a backward looking statistic. So the dollar remains strong. It hurts all of our exports. Any international company that you see, when they have a miss, they're going to say, gee, if only this was constant dollars. Well, guess what? There is no such thing as constant dollars. There's a dollar versus the pound, there's a dollar versus the lira, there's a dollar versus the euro. And it's all dramatically unfavorable. And the chart on the screen is the dollar. And it's simple to see. This is just 9 months. The dollar was essentially 95 cents back here this year. It's now almost $1.12, and it's traded above $1.12, I believe. Yep, 112.10. So this is a horrendous issue. The 2 to 10 spread is now 45 cents. So it's inverted. It's inverted dramatically. And even if we don't have a recession today, we will. And it's going to be ugly. Because we have all of this supply of nat gas and falling energy prices here, don't be deceived. Your electric bill is going up. Okay, two names that I want to mention here. Cano, Cano. This was a SPAC deal that had a high of about 1743 and came down like a rock. It had been trading as low as, let me take a look, traded as low as $3.81 and that was in May. It closed well, the day before it closed at $6.31. Yesterday it closed at 8.34 with a high of 9.54. And this morning in the pre-market, it's a little bit lower, 8.78, but that's still 44 cents or 5% above the 4 o'clock close. The story here is that CVS and Humana are both interested in buying this company. So, you look at it here, 50% below its high. And even with today's action, another 15% or so below the SPAC deal. And you see why people are interested. Also, Fresh Pet. Okay, I'm just going to make the statement. You know when something makes sense or doesn't make sense. Fresh Pet, which came in 2014 when money cost nothing and everybody was, looking at new highs in the S&P every day. Fresh Pet went from its $15 offering to 186. Today, up $6.50 or 6.3%. It's 45.47. Janus Partners taking a 10% stake in it. They're an activist, so maybe there'll be something there. But, you know, there are a whole lot, and I've been harping on this, there have been a whole lot of companies that made sense with free money or no cost to money. This was one of them. Even though it's still 45, it's also still down 75%. Okay, the rest of the futures. Dow down 385, S&P down 52. NASDAQ still down about 170. Just take a quick look at what the futures look like across the board. They are lower, mostly because of the dollar. Wheat is down, corn is down, all the grains are down. Energies are down. We're 80.61 in the crude, down almost $3. Heating oil's down a dime. Gasoline is down a dime. And nat gas is down 9 cents and actually was higher until very shortly ago. Gold, silver, copper, all down. Softs, all down. And the dollar up 83 cents. Uh, Bonds are down 18 basis points, and they were almost $1 lower than that. So it's going to be a rough morning. I hope everyone enjoyed my daily note last night. It took some serious thinking about things, but I think they're things you need to know. Have a good one. Have a nice long